We're back on Morning Movers with a look at DoorDash. The stock has surged 130% roughly over the past year, but Jefferies hitting the brakes, downgrading it to a hold from a buy, even while boosting the price target. It's boosting it to 250 from 235. The analyst expects DoorDash to beat consensus estimates and deliver peer-leading EBITDA growth, but says that's already priced in after the recent rally. In his view, the shares are now fairly valued at current levels. Time now for Options Corner. Joining us to take a deeper look at DoorDash is our very own Rick Ducat, lead market technician. All right, Rick, talk to us about the trends that you notice when it comes to the chart for DoorDash.
As you said, Diane, 130% gain here compared to both its consumer discretionary sector and the broader market, vastly outperforming here. And when we look at our chart here, a lot of the action has been in the past 6 months here. That's what we're focusing on today. We can see that after a lot of heavy trading here around the 190 level, price started to make an upward sloping channel after we had our tariff lows, 52-week lows, 155.40, traveled upward here, took out those old highs at this light green line near about 215. Now, though, we're kind of stuck here. A ceiling at our red line at about 249, a floor at our green line, 236, heavy volume areas here and here at about 240 and 220, RSI trending downward. Momentum slowing at the highs, a tense situation for traders here. You got to make a decision now, up or down, or breakout or downfall.
And then, Rick, any notable options activity that you noticed in the stock yesterday?
Sure. So when we look at the options market, this is a bit more of a thinly traded name. Yesterday was a little over 6,000 options contracts traded here, about even split between puts and calls, mostly centered between about 230 and 260 across the board. But the highest activity actually was in September at the 290 calls. Nevertheless here, talking about open interest, 230 contracts of open interest total across the board here, 62% calls. When we look at our near-term July expiration, 29,000 open interest, 53% calls. Most of the range here, 230 to 250 is where most of the call open interest is, but actually the highest level is an outlier at 255 there. When we look at the put side, more widely dispersed, less total though, 175 to 235 is the range, 185 is the highest. This is our shaded area for that July expiration, so really quite below what we would expect for most of the activity here.
Thank you, Rick. Shares DoorDash under a little bit of pressure right now in the pre-market. That's our Rick Ducat, lead market technician. Now to take us through an example trade, we've got Tom White, senior options contributor, and the other half of Fast Market. So, Tom, given the run that we've seen in DoorDash so far this year and this move that we have today from Jefferies, how would you set up an example trade?
Yeah, not surprising. We're starting to see some rollover in the shares after it's hit multi-year highs on this over 40% gains in 2025. So, maybe due for a pullback or at least some consolidation at this point. I think Jefferies makes some good points in that note on the downgrade today, although it did get some price target hikes outside of Jefferies also. So you got to take that into consideration. So I looked at a strategy where, hey, maybe I'm neutral to bearish on this one, but I want to give myself a cushion. I can still be wrong if the stock continues to move higher by selling it out of the money call vertical. I went on to the August 1st weekly options, about 17 days to expiration, and you avoid earnings. Earnings comes that first week of August after August 1st expiration. So we want to avoid that event risk in this stock if you're putting a position on. So August 1st weekly options, we're going to sell the 247.5 strike call, and then against that, we want to make it risk defined by the 257.5 strike call. So a short $10 wide neutral to bearish call vertical. You're going to collect roughly about a 250 credit if the stock opens up here, about $240 per share. If you collect that 250 credit, it takes your break even up to $250 to the upside. That's over 4% above the current share price where the stock's going to open up. And one of the keys with these type of strategies is higher probability of success. That's why you've got $750 in risk if it goes above 257.5. But you've got a probability on that short 247.5 strike of about 68% that it's going to be out of the money at expiration, which is what you want, right? You want it to stay below that level where this trade goes out worthless, and you just get to keep that 250 that you collected on this one. And as we always talk about with these high probability trades, You're going to profit in 3 out of 4 scenarios. Stock can continue to drop, consolidate here, or even you can be wrong. The stock can go higher as long as it stays below that $250 break even to the upside. You're going to be profitable on this one.
All right, the break even to 50, as you mentioned, to the upside there. That's a call vertical example trade for DoorDash. Thank you, Tom.